Welcome back to Strongman Personal Finance. We got to talk about AMC Entertainment Holdings Incorporated, ticker symbol AMC. There's a lot going on in the news, okay? We're going to cover all of that. AMC in the past month is down 72%. And you may be wondering why? Why did it drop so much? Is it about to go bankrupt? It's possible in the next couple of months or a year it's going to go bankrupt. But there's another big reason, okay? APE shares, they have been formally converted. That's right, ladies and gentlemen. The court case where there were some pretty butthurt investors in AMC that sued AMC and said, hey, these APE shares, they're diluting us. They're screwing us over. We want a resolution. Well, these shareholders, after spending ungodly amounts of money, I imagine, finally settled their court case. As a matter of fact, these AMC shareholders who sued AMC were awarded almost 7 million shares of AMC as settlement to effectively reduce the dilution of APE shares. Now, as you notice, AMC stock is $12.43. That's because the reverse stock split has happened. But if you adjust that for prior to the stock split, it's actually $1.24 per share. That is what I call absolute destruction. Now, the APE shares, remember, those APE shares were issued by AMC with the sole purpose of working around the shareholders of AMC who did not want to have additional share issuance. Remember, the apes, not the APE shares, but the apes themselves, the people that love AMC, a bankrupt company or about to be bankrupt, they did not want dilution. They were scared of dilution. So AMC had a little workaround. Okay, they said, hey, we'll give you these APE shares. Oh yeah, it's a special dividend of APE shares. And we're totally not going to convert these into common shares and dilute you. No! Well, that's exactly what they did. As a matter of fact, they filed a document with the SEC, as we can see right here, announcing the conversion of the company's outstanding AMC preferred equity units, the APE shares, into shares of the company's Class A common stock. So APE shares are gone, okay? That's part of the reason that AMC is dipping, even after the split, even after the reverse stock split. AMC is still dipping, and it's basically been more than cut in half in the past month. Now, is AMC going to survive? Well, I'm a little concerned about the future of this company. We'll go through the financials in a second. But basically, the company's trying to survive. They're in massive debt. They're not really generating any positive cash flows. They're barely profitable on a GAAP basis for a very specific reason. And they may potentially issue another 390 million shares. That's what they're authorized to do. And I have no doubt in my mind that they are going to issue more shares. Why are they going to issue more shares? Well, very simply, if you know how to read a financial statement, if you go to their balance sheet and you look at their shareholders' equity, they have negative $2.5 billion of shareholder equity. Very simply, what that means is that they have $2.5 billion more of debt than assets. Check out the pinned comment below and join our Discord community where you can ask me questions directly via text. And if you sign up for the highest tier, you can actually meet me in person every 2 weeks. So check out the pinned comment. Join the Discord community, and let's make some money. They are massively underwater. And if you look at their actual core cash flows from the business, they have been losing cash from their core operations ever since the beginning of 2020. The pandemic, the lockdowns, killed this company. They forced them to go into massive debt. And the only reason they were even remotely saved was because the shares went absolutely bananas. You get it? Because of all the AMC stockholders. But this company is burning cash at a very terrifying rate. Now, they had a little bit of reprieve in this last quarter, okay? Why? Well, we can see their admissions are up, their food sales are up, and their other theater, or whatever that could be, is down. But overall, they've had some pretty impressive revenue growth year over year between June 30th, 2023 and June 30th, 2022. Why is that? Well, I suspect it was because of Top Gun Maverick or whatever. The Top Gun 2, the new Top Gun movie with Tom Cruise, the Scientologists. That's the problem with this industry. Their revenue did very well this last quarter compared to prior quarters. But it could be a one-off thing, okay? And now we have, Barbie and Oppenheimer? Okay, maybe that will help contribute and grow AMC's revenues too, because AMC makes money not just from admissions, but they also do it from food and beverage, and they actually have insanely high margins. As a matter of fact, they collected $488 million of revenue in this last quarter just from food and beverages, and they only spent $91 million. That's insanely high margins on their food and beverages. So getting people into the theater and getting them buying food is popcorn, whatever, is where the profits are. And I can tell you they definitely make profits on that because the food is outrageously priced. I remember my girlfriend, when I first started, well, my wife now, when I first started dating her, she's like, "Hey, Chris, you want to go to the movie theater and you can buy the tickets, or I'll buy the tickets, and you can buy the food. It'll be roughly 50-50. She spent like $20 on tickets, and we spent like $50. Me spent like $50 on popcorn, and she's like, "I want some candy," and she has this weird thing where she puts jalapenos in the popcorn. It's like, it's weird. But I spent a ton of money for freaking popcorn and food, okay? So the food is where they make, the most of their profits come from food. And we could see, this is their most recent quarterly income statement. We go down and they actually had a slight profit of $8.6 million. Now, people may say, "Oh, that's a great sign." Well, like I said, number one, it's because of Top Gun, I believe. Top Gun was a big contributor to the top line revenue. And because of that, they were able to get people into the theater. And in the theater, they were able to sell them food and beverages. But check this out. This is their operating income. So they actually had operating income. This is their profits before interest and taxes and like one-time things of $84 million, almost $85 million. Look at their interest expense. Their interest expense, $92 million, is bigger than their operating profit. They cannot even cover their interest payments with their operating profit. The only reason you see a profit down here is this other expense income, which I'm not sure exactly what this is. They probably spell it out, into the financial statements, deeper in the financial statements. But without this one-time thing, it looks like they would have had big issues. And you can see their interest expense is going up. They cannot cover their interest with their operating profits. This is not good. So you're investing in a company now that had a temporary spike in revenue because of one popular movie. That doesn't last forever. They can't cover their interest from their operating income, and they have $2.5 billion more of debt than assets, and they want to issue an additional $390 million of shares. And if you think about it, right, let's say they issued all 390 million shares. Okay, they get maybe $390 million of cash, best case, if they issued them all at once, because the stock price is so low that they're not going to get that much money for shares. So the stock price will probably plummet pretty significantly. So they can raise some money, but you got to ask yourself, well, how much of the share is going to dip with even more insane dilution? They're going to dip a lot, okay? So I'm a little concerned. Now, I don't know if the 390 million was split adjusted or not. Now, if they can actually issue 390 million shares at $12 a share or maybe a little bit lower, okay, that's more cash to tighten up the balance sheet. But they're still going to have massive issues going forward. So while the stock has dipped pretty significantly, and you may be saying, well, it's only $12.43 or $1.24 before the split. Is it a buy? No. This company can still easily go bankrupt. As a matter of fact, I give it a better chance than not that it goes bankrupt. The only thing that's going to save this company is if they continue to have blowout movie theaters, blowout screen times, and they can continue to get people in there and buying popcorn and stuff. But stocks can go to zero, boys. You think they can just drop, and at some point they're going to bottom out? They might not. So it's an insanely risky play. Now, if you want to do the trading thing and, options and the short squeeze, be my guest. But in the long run, despite any temporary market fluctuations, this is a highly risky company to invest in that has a good chance of going bankrupt. So I wish you good luck. I'm not touching this thing with a 10-foot freaking pole, and you have a wonderful day. Cheers!